All right, welcome. We had I put this message up the other day. All right, taking video requests. Most popular suggestion gets recorded. Most popular suggestion was Yaks, which was the BSV fundamental analysis for wearing a Santa hat and thongs. So I want you to visualize that right now. I want you to visualize that exact setup that's happening here. We're not going to do the BSV fundamentals, but you can imagine the Santa hat and thongs. And I'll give you a clue as well. The Santa hat isn't on my head. Right? So, what I decided I would do is, actually there were quite a few suggestions in here. There were a load of things that people mentioned, so I thought what would be easier actually is if I just did a video answering these questions rather than doing individual videos on each of these things, because some of these I can answer very quickly. I didn't want people to get left out of this process. So first of all, my man Pepe here says, explanation or overview of stock RSI or other indicators you like in addition to regular RSI. So one of the other indicators that I like is the awesome oscillator, as we well know, and one of the ways that you can look at utilizing the awesome oscillator and RSI is waiting for confluence. Alright, so waiting for confluence. Now, what we can do is very often we can take divergences. We can take divergences based on RSI having a divergence, AO having a divergence, or both having a divergence. And I really like setups where we've got double confluence. So here, I'm going to use the funky new highlighter, right? So here we've got a div, here we've got a div, here we've got a div, right? Here, 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 and here, and here, and here. Okay, so we've got all of our divs here, and we've got double confluence between them. We've got that confluence between those divergences, which sets us up for really nice positions, right? Really nice opportunities. And actually, we've got an extended divergence for this region all the way up here, which led to this big drop off in the end. So really nice confluence when we use our RSI and AO to double confirm those divergences. And what you'll see as well is by doing that, you actually save yourself. Right? You save yourself a little bit of trouble, because the RSI we know through this region in particular on BTC was very awkward. It was always overbought. There were the potential for divergences between legs, right here and here. We had the potential right here and here, whereas what the AO demonstrated is a clean trend all the way up. Right, so actually the AO would have saved you in this situation. So when you're looking for that double confluence, you don't have it here. So which means that you wouldn't have taken any unnecessary short risk in this region of price, right? So that's a really good example on higher time frame how the AO can save you, because the AO is slower. It is slower. It is going to creep up slower, and what it's doing is it's protecting the trend, which in this instance just went up. Now, interestingly, the area that AO did make a divergence was here, here and here, and here and here. Alright, so we now have that double confluence in this region. Now we know from the price action today that we're pushing up higher again. What we could do is end up with a situation where we get the AO up here, and then maybe a triple divergence through here into what high is created up here. So we could end up with that situation. That may play into the dollar thesis that we're having as well. It may play in a little bit as well, like we saw in this area of price, but just on a daily. Okay, where we get that leg up here. Essentially we get that triple divergence as well on RSI, even though we have the crossover here. Alright, so we may have the benefit of having a slightly slower indicator with RSI. So the AO is a great double confluence tool, and let's add stock, because stock is another thing that I think people can take on board and learn more about. Now the stock is very good because what the stock does is it helps us time positions. Right, it helps us move into our positions, and I primarily use the stock for higher time frames. Okay, so the dailies is a very good one, the weekly is another good one, and the 3-day is also a good one. So you know, if we just take a look at the history of stock RSI and BTC, we can see that actually it's a really good indicator of when BTC is going to move up. If we just take the 3 instances on the 3-day, the 4 instances, sell off here, 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 here. You can see that just using stock RSI alone is a very good way of moving into position, which is also a scary ass thing when we look at where we are currently, right? And what could potentially be the spillover from that. So using stock RSI can be very, very helpful, because what it does is it helps to manage entries into a strong trending market. And that can be very powerful. So even though RSI may be saying to us, oh, I'm really extended, I'm oversold, I'm overbought, then stock RSI helps us time an entry into a market that's already moving. So when we look at a region like we have done here, what we would say is that stock RSI crossing here would lead to further upside in BTC, which would obviously be hyper aggressive. But that's worked really well for these regions. So on higher time frame, you can just use stock RSI to gauge your entry into higher time frame trends. If we look at it from a divergence perspective, it can very often give us good timing with divergences. So if we take this top area on BTC through here, and this area here that was quite divergence potentially heavy, right? It only actually locked in maybe one divergence, maybe two with this region here. Now, what stock RSI says is basically, if we are moving upwards, if we are traveling from bottom to top, you don't want to start shorting. The regions you want to look at shorting is when you have confluence between a divergence and overbought conditions. That's when you want to look at shorting. So when you have the confluence between this and a div, that's when you should look at shorting. The way that stock RSI moves also doesn't mean that necessarily price has to come down in line with stock. Because like we see through this region, stock actually travels all the way down whilst going up. And that's very similar to what we see in the cool off in RSI. And so the stock does not need to be at the top for price to drop. As you can see here, the price dropped when stock was here. That's where we got the sell-off, was in this region. So what you're looking for again is that double confluence. You're looking for divergence along with conditions in the extremes. And again, the higher time frame, the better. So right now on BTC, the fact that weekly is up here is a really good sign potentially that this could be due for a cool down or a sell-off soon. And we saw that here in this region, but again, we've seen it also do this. Where it stayed at the top a little bit like RSI and moved up. Last weekly drop here and here. It's a little bit like the 3-day. We see pretty decent interaction with the stock RSI being in this top region on BTC and the resulting moves that we see from it. So pretty good. So stock RSI confluence with timing, RSI divergences, and making sure you're building your position when the higher time frame stock is in the overbought or oversold regions, or utilizing those regions in order to try and join the trend. Alright, so that's what I'm using, okay? That's how I would use stock, and that's how I use AO as the combinations. Let's get this back over. Oh, and there you go. Mon says discussion on AO on the candles. So yeah, covered that off in that thought process as well. Okay, so Pepe says again, options. How and when you prefer using them, as opposed to spot or leverage trades. Alright, so the reason I prefer options, and I've been seeking out an options solution for a long time, is because options are really great for discipline. They are really great for discipline, because what you do with an option is you define your risk up front. So you say, I'm willing to risk $200 that this is the play out. This is the process that we will go on for whatever trade I'm taking. And I really like that element of just putting on a trade and just stepping away and being like, okay, if it goes wrong, then this is my risk, right? If it doesn't work out, this is my total risk, and I'm happy with that loss or not. So number one is the kind of the discipline it instills in setting up your risk up front. The good thing with options as well, especially for those that struggle with their risk and with the psychology, is I'm not in any temptation to add to a loser. Right? I can potentially look at opening a different options contract, but I'm not interested in adding to a loser. So I don't find myself in a position where I will be unnecessarily adding or averaging down into a position hoping that it picks up. So it can often protect some of that mindset that we have with trades where we get too excited or nervous and we add either to a winner or we add to a loser because we want to increase the size, we want to get bigger. Right? So options takes away that element of things. It reduces that necessity. The other thing is it's a really good way of swing trading. It's a really good way of putting in swing positions and establishing those nice and early. Okay, so if you have a thought and a higher time frame thought, you're less bothered about the price action that occurs. Okay, so you know what it's like when we sit in front of charts and we over-assess things, and an idea, very often, I was speaking to somebody about it this morning, very often ideas that we had 3 months ago were literally the best ideas and the best trades we could have taken. But because we spend so long in front of the charts, we change our minds 6 different times on the direction of something. Whereas options are a great way of swing trading because you essentially put down the position, you've established your risk, like I said, nice and early on, and you just watch price, right? Price just goes and does it, but you're already in the position, you're locked in. So you're not thinking about taking the position, you're not taking the position at a support level, you're not waiting for a retest, you're not waiting for a div, you're not doing any of those things. You're simply taking the position based on the setup you saw at that time, and you know your risk up front, and then you step away and you just let that position play out. The other time I like to use them is aggressively. So you can use them for, really tight options. So for BTC and ETH, there's some really nice kind of daily options that you can take. So you can take some of those that are more aggressive. So if you imagine that BTC is going to break to the upside, you can buy some calls for the same day. Tend to be very well priced, tend to have good payouts if you're right in them. And they're really good options for, sort of aggressively intraday, 24-hour, 48-hour period moves. Classic one is if we see something like the hourly RSI starting to creep over 50 and the 4-hour starting to creep over 50, and we imagine there's going to be that upside push from price, then we've got the potential to move in. We've got the potential to move in there and to take a trade. So some nice options on some nice options on options. How do you decide where to focus your time or select assets to trade given such a wide variety? So this one is down to personal preference. So my preference is equities, always is. I think just the range of options available in equities and the fact that the markets aren't correlated is a really big thing. If you're deciding where to focus your time in your crypto related and crypto focus, then my advice is always follow the volatility, follow the biggest gainers and biggest losers, because that's where the action is. Okay, so the biggest gainers and the biggest losers. If you want a quick way, just filter your watch list by percentage change. Take a look at these, right? So we know SNX is having a terrible day today, but we would now be looking for potential support regions we could identify in order to try and play a bounce. And likewise, if we look at the biggest gainers, you've got Theta, right, BAL, Rune. So we just look at this list from the biggest gainers and focus our attention there for the day. So if you're intraday trading, that's the way I would look at trading. I would look at trading filtering by percentage change, positive and negative, looking for support, looking for resistance, looking to buy into the biggest gainers, right, and looking for the support levels on the biggest losers. So if you're intraday trading, that's what I would do. If you're swing trading or you're looking for higher time frame setups, then you've got more time. So the variety or the range of assets does not matter too much because you've got time to assess them all. Make sure you're setting alerts. Right? It's one of the biggest things that you can do so you don't forget about levels or things that you've looked at. I did that with FCell in equities and got punished as it ripped, hugely up. So make sure you're setting alerts, and that will give you an ability to be able to get back into all of the things that you have done. How much fundamental analysis you put into equities trade? 0. So versus plain analysis, it's 0. Versus technical analysis, sorry. Yeah, I do everything based on TA. I always say, I think that FA is the driver. FA can be the driver to whatever happens in the market. So like with COVID, there were a lot of overbought conditions, a lot of weekly divergences. And then COVID came along and smashed everything to pieces. But everything dropped down to technical levels, right? It dropped down to support resistance flips. The example that I use on Tesla. Let me just cover that off very quickly. So the example on Tesla is here. Okay, this is a monthly consolidation and a monthly resistance here on Tesla. Lasted for 2.5 years. It could not get out of this region. We faked the downside, we pushed heavily up, and then COVID happened, and COVID retested this range here. Okay, and then we rallied. So fundamentals drove the sell-off. Technical level was the important one if you wanted to trade it. So for me, the technicals are always the key thing. The fundamentals may drive some events. They may do things like if we have a weekly divergence on Tesla, and then suddenly Elon announces that he's cutting 10,000 jobs, right? Then obviously we're going to get a sell-off. So with the setup was viewable from the TA, but there was a fundamental driven event that pushed that into action, or actually the event transpired as a result. So that's what I look at, right? That's what I look at. I'm looking at the TA first and foremost, and the FA I still consider as a driver and something I have to be reactive to. Holy shit. Well, that's interesting, huh? There we go, boys. There we go, boys. Oh, well, this is kind of fucked up the video, isn't it? Now, I have got to keep going on this because there's no use me getting distracted by the price action that we're seeing up here. So I will keep this going, and I will catch up with the price in a moment. An overview of your personal history and getting into trading, lessons learned and major takeaways. Maybe that's something for a different video because that's a longer conversation to have, right? So maybe that's something for a different video. We'll look at covering that off separately. I would greatly appreciate a video about how to put RSI on a chart and not separate block off the chart like a retard. Your Guppy and Renko colors, impossible. Proprietary. RSI. Make sure you hide all of your scale lines, and that will help to remove the boundaries between the two, so you haven't got a clean block between everything. I would like a 3-hour video on chart aesthetics. I would love to do that, trust me. Building swing positions, how to manage risk when averaging in, and how to manage longer term swings in crypto. So let's do that as a separate video because that is a more detailed topic. We'll continue covering off some of the smaller ones. Switching plans and knowing when to turn around from short to long and vice versa. Well, this depends on the style of trader you are. So if you're somebody who is a scalper, is a lower time frame trader, then you have to be able to do this, right? That's part and parcel of your job as a scalper and a lower time frame trader. That's part of your job, is being able to go short to long to short to long to short to long to continue playing. So switching plans and how to spot turnaround is depending on your setup. right? And depending on the criteria that you're using to trade. If you are a divergence-based trader and you are using bull divs and bear divs, right? You'd be entering long on a bull div, you'd be closing the position on a bear div, and you would be flipping your position. So that's really all we'll be looking at doing, right? Is moving between positions. So we're just taking the opposite side. The thing that people struggle with is not how to spot a turnaround, it's actioning a turnaround. So a lot of people, they don't struggle with actually spotting the turnaround. They struggle to action it. So they struggle actually just saying, I have to close my position here. That's what people struggle with. So what you have to do is you have to, again, put into your frame of mind, what is your trading style? What is the trade you have taken? Is it a scalp? And if it's a scalp and the chart is screaming to you that it's reached an exhaustion point, then it's time to get out. It's time to get out of the trade, because you're a scalper. You can take multiple trades a day. You don't need to hold on to one position for dear life. If you're a swing trader, then you can think about the parameters around why you would want to stay in position. So for example, if you notice that we are now overbought and we're showing signs of extension to the upside and you're long, is your position set up to establish a swing back down? Are you set up to be able to handle and, sit through a period where price is going to come back down towards your entry? Is that going to be possible for you? So good things to keep in mind. But the issue here is not that people can spot when to turn around. Most people can identify when price is extended, whether that be based on RSI overextending, divergences being formed, awesome oscillator divergences, major higher time frame resistance being hit into. Okay, lots of people can spot those signs. Not many people can action them correctly. So the thing that I would really urge you is focus on being able to action the signals you see and do some back testing. For example, on BTC, when BTC is in a strong uptrend or an alt, what does it look like when it reaches an exhaustion point? So you can spot those signals next time. So dive into BTC and take a look at, how do we spot an exhaustion point? How do we spot when BTC is tired? How do we spot when that, pullback is incoming? I would like to know when to abandon a position when I'm in profit and not wait for my stop loss. Like when to know this is going to reverse on me. So the first thing is I think management of expectation in terms of the trade. So if you're taking counter trend positions and you're kind of like nervous about the trade either running in your favor or it's going to carry on in the trend. That's typically where we get these feelings, is if we go short into an uptrend and we're kind of like then holding on, prices hovering around our entry, and it's like it could continue, it could stop me out. Do I stay in position? Do I close it? That's really the situation that most people have this in. The process is relatively simple for this. You are looking to stay in a position until you are invalidated. Your stop should be set at the invalidation point. Technically speaking, you should remain in the trade until your original invalidation conditions are hit, i.e. your stop being hit. There are times where we may begin to identify that the trade is not going to run in our favor. So I'll give my example. My example is if I take a trade, a counter trend position based on an RSI divergence, and price moves back down with RSI to the 50 level, but there's no huge difference in price. Alright, so if I get something that, we're up, we do this, we create a divergence here and here, and I short it here, and we do this in price, we just move down like this, right? And RSI comes down here and it resets. Then this is potentially now a time for me to exit my trade before it hits my stop up here. Because now what I'm seeing is, look, I'm counter trend. We've got down here. There's not much momentum. We're not carrying this further. We're holding at a midpoint, which I know is where we reset and where we invalidate. And now I have a good case for closing my position early instead of watching this come back up into my stop. So being proactive in a situation like this can be really helpful. But what I'm doing again is I'm utilizing my thoughts around invalidation, which is the 50 level. And I'm saying there's no push through, there's no momentum, there's no continuation. Therefore, I look as though this divergence has either played out or is invalidated. Time to exit. Okay, so really, really important you still keep that invalidation theory in your mind. But again, it's going to depend on what setups you're playing. What setups you're playing, what criteria you use for entry, and what that looks like for you. And so yeah, so abandoning a position when I'm in profit, right? That's essentially still what we were talking about. It's an active assessment of the current conditions and the criteria under which you took the trade. And things like counter trend positions, RSI resets, if that's one method you were using, then that would be my my criteria. Do we have anything else? No. So we've got to cover off Dan's question here about building swing positions. That's definitely something we've got to do. And we've got to cover off Pepe's last point in here, which is an overview of the personal history of getting into trading, lessons learned and major key takeaways. All right. So I guess I'll join in with a discussion with you guys now in the group on BTC price action. So thank you for watching this. I hope there was some value in answering those questions, and speak to you shortly.